Okay, I'm going to go ahead and use our manual back tester because I think that'll make this just a little bit faster as we go through the trades. Again, 2 minute coming into Monday the 16th. So as I set this here, we're going to use a 100 tick stop as I have that already programmed into the manual back tester. Now let's just go through a few of these. Well, now, of course, first thing you're going to see, this is the sequence we were just looking at in the first section of the video. Well, interesting, right? Right before the open, we come literally tag the 50 of this zone here and then pop. But let's assume we're going to wait for the market open here, so we get a zone here. Here's the first retrace. It doesn't get into our little fib zone here, so we miss here. But then you'll note here on the next one here, as we come into this, we come right into the pocket here, right into the zone. The 50 is this is 38.2, 50, 618. So we come right into that zone. So there's our first trade. Because we don't need that. So with our manual backtester, we just create some hotkeys. So I'm going to create a long scenario here. So long at the 50, I'm going to use, as you'll note here, there's a 100 tick stop on a 3 lot. So first target, now it's not the zone here. We're reacting to this zone. So first target would be this pivot. So if I just use that here for a first target, okay, well let's it's early in the day. Let's go ahead and let's be conservative here. So what do we get there? We got 117 off the first one. Okay, now this was a rip-roaring trend here, and as you can see, the retracements are so small. Per a 2 minute here, we're not coming back here. These are just incredibly strong. It's not until we get into a little consolidation and eventually we get a little bit of a pullback at the end of the day. So here on this particular day, if you're using this technique only, well, you had one winner here. Again, we're moving so aggressively here. Oh, we get. Do we get one? It's barely. I can't even tell if we get there. Looks like we get. Nope, we would have missed that one. Here's the 382. We don't quite get there. Here, we don't get into the retrace. So on that day, with this approach only, on this market only, you really only had, assuming you're not trading anything pre-market where we did have others, you just have that one trade. Right? Again, strong trade. The retracements are so shallow you don't get a pullback. Okay, well, fair enough, right? That's some days it's not going to be there. It's not going to cooperate. Let's skip the overnight here. I'll go into the next day and see if we can carry on and find something else. Now, sometimes you will have overlap in zones here. I'm using a 10 swing structure here. This is flexible, but again, our point here is just to go through the P&L here and see if we can make this profitable. So we start early. We start with the trend here. Here's the downtrend. We've got just this massive uptrend, nothing. So this does not. There's nothing that we can trade off of here. Oh, pardon me. Right. So there. If I draw it here, you can see this. This comes over here. This would have been right here for this downtrend. We're under the 200. Right, using that for a little trend recognition here. So there is a short in there. Let's go ahead and use that. So I'm just going to F11 here. Here's the fill. First target would have been down here. At the very least, right? Reasonable if you got your how far are you ahead there? Oh, you're $228 ahead on your short. We don't want to be overly accommodating to the fact that we can see the result here. But if I'm 228, I'm at least moving my stop to break even. So let's assume a little slippage here, and we'll call that a loser. But I think most of us, right, if we're that far ahead, we're not going to just let that all come back and not move our stop. So let's call that a small loser. I'm going to assume, right, as always the case when you're doing a manual back test, when you have the benefit of knowing what the results are. You don't want to be accommodating to the fact that you know what's coming. Be very hard on yourself. So let's not assume a perfect fill there. Let's assume a shitty fill, a little slippage, and so we have a bit of a loser here. Well, now we go up, right? So if I draw it so you can see it. So here's the new swing. We retrace. Now we color code for a short. I've changed the color here to this bright magenta, and a buy being a blue at the 50. So I come right to the 50 here. Now again, this is a highly volatile market. We're coming up here. You'll note the first target would have been the structure high. We don't quite get there, but let's just again go through that math. If this is a long and you're entering here at the 50, my stop's down here. If I get up, what do we get up here? I'm up $335 here. I'm not quite going to make this turns out it would be the IB high. I'm not quite going to make that. Again, I'm going to assume that most of us here, if we're up 335 through almost 240 ticks on a 3 lot in the MNQ, we're not going to let our stop get taken, right? So let's assume we come back down, and again we go to break even, and let's assume a lousy fill. Okay, so there we go. So then we come back up to the end of the day. Here's the next one. That would be again another short. So let me hit F11 here. So I'm going to take this one. Now you're getting into the end of the day. Here would be the first target. So let's go ahead and just assume. We're going to the 4 o'clock. So we get a slight winner there. So 162 on these days. All right, we're not getting big numbers as a result of this just yet. And we get something bigger here. All right, so going into the day, we have nothing. Here's the first one. Again, note the 200, right? Just you don't have to put the 200 on. It just can be useful just for a little trend bias here. And then of course we get the monster sell-off here. Well, does the fib zone, the DRZ, give us an entry there? Well, it sure does. Now here's of course a classic example. Well, you don't know that that's coming. So let's just go ahead and take the entry here at the 50. Right, stop is not getting threatened. Well, okay. Well, here's a nice example. If I took the scalp here in the midst of this, this Fed, right? Are you trading here? Well, if you were, right, you had a monster winner. I'm going to assume that we're not trading while they are, while that press conference is going on, and you're getting the result. Obviously, massive winner, but of course you don't know that, and I'm going to assume most of us would not be trading right as the Fed is on the mic and putting out their statement of what they're going to do with interest rates. So despite the massive winner here, let's not be overly accommodating here. I don't want to pad this with something because of the benefit of hindsight. Okay, so here we go again into the next day. Again, I'm staying on the 2 minute. Okay, so we haven't had a lot of action here on the 2 minute. So here's an example here where if I draw this, maybe this makes it easier, right? So here's the 38 and the 618. We're coming. What I will typically do is I will often use our footprint indicator, or I'm looking at a footprint chart. If we get into this pocket here, I'm starting to look for shorts because at the 382 I start looking. Right now we may not make the 50, and you see here we don't quite make it. We get a couple of wicks here. Again, let's not be overly accommodating. Let's assume we got a fill here. Now our target is going to be the low of that zone. So let's use that first target here since we're being accommodating to the fact that we get a fill. So let's just go ahead and use the first target here would being that low. So there we get one. Now we come back again. F11 again. We're going to enter here. There's the stop. Here would be the target. Let's assume we're going to target the IB low. Okay, we're looking a little bit better. Now we go again. Now when we break, right? So to follow the logic of this, yes, we have an upswing here, but once that upswing is broken, then we're looking for the retracement of this zone. So this breaks, we come back this direction, and we're looking for it that way. So we come here, right? You took a little heat on this one, but let's go ahead and take the trade. We're going to enter. Oh, let's assume we're entering right here. There's the 50 right at the 200. Right, this one you'd have been stopped out. All right. Well, if you're trading with a 100 tick stop, this is kind of a decent example where a little money management discipline is keeping you out of a winning trade here, because if you're trading the trade as it's designed, your stop would be up here. But if you're trading a 3 lot in the MNQ and you want to keep your stop to 150 per ticket, or per entry, okay, well, sure, we can see that the stop should be up here, but if we want to maintain that discipline, 150, you're taking the stop. Now the question is, would you be looking for a re-entry? Looks like you get one here at the tail end of the day. Here's the zone, here's the retrace into it. Let's go with another F11 here. You're not going to get stopped out at that one. There's your target here. So it's the date. We still got a day. See if we can get something for the end of the week. That's all overnight, and then we get a monster, a lot of volatility in the week. Here's the open. Here's a decent example again where you don't have to use fibs here. You could use 25, 50, 75, right? I'm just using fibs just to make it simple and make it easy. Here's the little pocket zone. Let's get that right on there. The little zone of fibs between the 38 and the 50. Right, so you would have an entry here on the long side. Let's go ahead and take that entry here, and we'll use first target. Perhaps you're going to get a partial here. Oh, you've just opened here. You've got that swing. Likely you're going to take one or two out here, and hopefully let a runner go. So let's split the difference there. That's a Well, that's a pretty good number here. Maybe that's overly accommodating here. The little pullback here. Let's say you got a little spook there, so you got a partial, and maybe let a runner go there. All good. Okay, so let's go with that. We're looking pretty good on the week. Again, this is not that many trades, right? So it's not about number of trades. So do we get one here? Yes, we do. We go right to that target. So let's just use the. Oh, let's not assume the absolute high. So let's just use the first target. We're good there. Coming over here, looks like we don't quite make it. If I draw the zone here, we don't quite make it. Nope, so we're done there. Okay, so for the week, and this is, you may or may not use a 2-minute. I just thought that would be, I didn't want to have 200 trades here. This video would be too long. I typically will trade it with tick chart. I might use a 2584, 2500, or 2000, even a 4000, depending on how volatile the market is. This was a very volatile week, but a 2 minutes, a reasonable way to approach it here. So you can see it. And we had total trades of 10 over those 4 days. Average number of trades per day was 2.5. Net profit was 18.57. Win ratio was 70%. The profit factor is 8.73. 3.81 is the average R. Expected value 185.7. Very, very good number. 7 winners, 3 losers. Pretty much, your biggest loss was 153 on that one we looked at. So, I mean, enough here to where I think it would warrant some additional back testing. Again, there's no magic to 2 minutes. I just did that to reduce the number of trades over the week. Again, try 1 minute, try 5 minute, try if you're a tick chart trader or a volume trader or whatever bar size your selection is, this can be very effective. I mean, you could work with it on Renko charts as well if that's your preference, although you won't pick up the fair value gaps that are built into the indicator. So that's a good kind of an introduction to how you might anticipate some of these trades and how you can do a little back testing on this. I would encourage you to do that. Of course, you can always download everything you see here on the screen. You can download and trial the DRZ indicator. I haven't completely gone into all the detail here. There's an SBS structure in there, which we'll cover in the next video. But you can download our manual back tester and have at it. See what you think. Try it with a 1 minute, try it with a 5 minute, try it with a 10 minute. Of course, the higher the time frame you're working with, of course, the distance from the 50 to the high and low of that zone is going to be much larger. So you have to factor that in with regards to your risk tolerance and what's the risk reward that you're after and the amount of risk that you're putting onto the trade based on the size of the retracement swing. Right now, again, you can do this on this example here. I'm using a swing strength of 10 bars on either side. You can lower that, make it higher. A lot of flexibility here, but the concept is what we wanted you to kind of dial into, and the fact that we have, when we get these retracement zones, for all the reasons we looked at in the first part of the video series, there can be often activity there that can create a good scalping opportunity and perhaps a scalp and a runner. Right? I'm being very conservative on these targets with the manual backtester because we know what's coming, right? So when we see that, right, are you staying long? Are you staying long, or are you going, God, I'm up $600 here, or do I want to take that, right? Hindsight, right? It's always easy. But I do that so that if you're doing your own backtesting, don't be accommodating to the fact that you know what's coming. What would you do, right? That's between you and you as to how you would approach your backtesting here. Are you going to stay short here? Are you going to stay long? Are you going to take that trade? Those are kind of things to think about when you're doing a manual backtest when you know what's coming, right? So just a few ideas. Hopefully that gets you started on this. So I think here, list an intro on what's behind the indicator, and here just 4 or 5 days to show you the potential of it. Okay, with that, feel free to download, just like all of our indicators. Anything within our suite of tools and indicators is available for a download. You could download this, the manual backtester, have at it, do a little back testing, and see what you think. Okay, guys, talk to you next time.